Hey everybody, I hope everyone had a good day and had a good week. In this video, I will review the Emini 5-minute chart for Friday, April 4th, 2025. I want to take a look at the higher time frame charts, at least briefly, just because I think it's interesting. Look at the day only session maybe. Actually, this might be easier. What I want to talk about on the weekly chart. Yeah, so here's the weekly chart, and it probably sounded crazy. A while ago I was talking about this bull channel, and it seemed like every leg seems like a late leg. Maybe this is leg 3, leg 4, somewhere up here. The reason I guess I would say I get concerned, or concerned isn't even the right word. I'm more hesitant to buy, especially at new highs when the market is channeling like this, because I know that most of the time the market, with the market cycle, channels evolve into trading ranges. So I thought it was unlikely that the market would break out above this bull channel line and break out into an even stronger bull trend. I thought more likely this channel would evolve into a trading range. And that's basically what's happening here. And it's happening in a hurry, but you can see the market cycle. We have a spike and channel, and the channel is evolving into a trading range. And you can see we've already tested below this swing point. And you can also see 5,000, big round number, not too far below. It looks like we're going to at least 5,000. But if this entire, all the way over here, if this is part of the channel, then who knows, maybe we could fall all the way down to about 4,300 or so. Or maybe 4,500. But I just thought it was interesting because of the market cycle. We had this channel, market is continuing higher and higher, but eventually it's breakout mode, maybe a triangle, final flag after 3, 4, 5 legs up, and the channel quickly evolves into a trading range. Everybody agrees the price is too high up here. We've been in a trading range since at least over here. Spike, pullback, channel. The pullback is the start of the channel, and the start of the channel often becomes the bottom of a trading range. But we can see this week this is the weekly chart. The weekly bar broke out and closed below this support level. So we'll see if the bears get followed through. And then I also wanted to show the 15-minute. And maybe this is not ideal. 60-minute chart. Okay. Actually, let's try 30-minute. What I want to demonstrate here is how a bull channel is a bear flag, because it's what I just said. Bull channels, bear channels, they usually evolve into trading ranges, which means a bull channel can be looked at as a bear flag. So just look at this chart up to here. And we had this sell-off, pretty tight bear channel. If we look at this chart, I'm sure if we looked at the 5-minute chart, it's actually, sorry I'm all over the place here, but I forget if I was looking at the 5-minute when I had this thought. I wanted to share what I was thinking. This was March 28th. Let me just try the 15-minute. We'll go from there. What I want to demonstrate is I want to compare the strength of a couple of moves. So over here, tight bear channel, a pullback, but minor, and then another really strong bear breakout, tight channel. The selling from my cursor from here to here, much harder to make money buying. So it's a lot easier to make money selling. It's a tight bear channel. But if we look over here, look at this bull channel. Again, this is the 15-minute chart, so you know, if we look at the 5-minute, which I actually do want to look at the 5-minute from the 31st to the 2nd. Yeah, this is what I wanted to show. Here's that same time frame, but on the 5-minute, the same time period. So look at the bear trend. Really hard to make money buying. One way to really determine the strength of a trend is to ask yourself if counter trend traders can make money, especially if the stop order traders are making money. Because you know, limit order bulls, maybe they're making money, they buy at the low, they scale in, they make a scalp, but it's much harder for a stop order bull to even make 1R, 1 times their risk. So this is a really strong bear trend. And you compare it to this bull channel on the way up. And here, it's a fairly tight bull channel here. But once we get this kind of sell-off, the market may have been always in short, at least for a short period of time in there. Strong enough sell-off for a second leg. And you start to notice stop order bears making money, stop order bears making money. We get this buy climax. And then the point I'm trying to make is that this entire bull channel could simply be seen as a bear flag. So again, a bull channel, but stop order bears beginning to make money here. Very deep pullback, buy climax, but it's all part of this channel. And we know channels evolve into trading ranges. So even when we're up here, the channel began here, the market could come all the way back down and test here. And then we had that huge gap down right to that bottom, to that support level. So I just thought that was interesting. Now for today's review. Today we had a big gap down, and the context is so bearish that you have to be cautious looking to buy, even, I'll get to it at this point. But let's think about the open. We had a big gap down. Whenever there's a big gap, I like to look at the 15-minute Globex chart, see what we had going into the day. And here it is. So here's yesterday's close. We had this tight trading range, maybe a bear channel, lower high here, and then this big bear breakout and follow through. And you know, this breakout is probably going to get a second leg. There were trapped traders here. So any bounce, any reversal attempt by the bulls will probably be minor. And just eyeballing it, maybe this is a 50% pullback, maybe a little deeper. But because the odds favor a second leg down, this is where bears will start to be, or I should say sellers will be more aggressive, because once you get that 50% pullback, traditional stops for the bears up here. Bears looking for a second leg to a new low. Here's 50%. Bears will start selling aggressively because they know the odds favor a second leg before a stop run up here, and the bulls know that too. Any trader who bought up here and scaled in lower, they may just look to exit wherever they can around here. When we start to stall, you can see selling at the moving average. Maybe it's 2 or 3 legs up. But that's the context going into the day, so I'm expecting at least a little more down for the bears. So here's the 5-minute chart. from today. Doji on bar 1, down and up on the open, so trading range, but again, bearish with the Globex session. We're below the moving average, so bull setups will probably fail more often. We rally on 4, pause, pull back on 5, outside bar 6, 2 legs up, testing resistance. Why is this resistance? Because look at bars 1 and 2. If a trader bought the close of bar 1, they got trapped on bars 2 and 3. And when the market retests the close of bar 1, let's see if we're going to find resistance there again. The last time we were there, we sold off, the bears got a breakout and followed through. Retest it, and we find sellers again. And then we get a strong micro channel for the bears, 3 or 4 bars down, a pause on 10. But is bar 10 a major reversal? In other words, are you panicking out of shorts above bar 10? No. Even if it's leg 2, 1, pullback, 2. This might be leg 2 in a bear trend. And bar 10 is not a bar that bears panic out above. Because of that, bar 10 is a minor reversal. And the odds are the sell-off down to 10 will get a second leg down. So sellers above, it's a very brief pullback. And let me add, whenever you have a micro channel with a micro gap, which is a gap, a space between in this case for the bears, the low, a bar, and the high of a non-adjacent bar, so 7 and 9, there's a gap here, there's a space, and that represents trapped traders. And the presence of a micro gap decreases the chances of a deeper pullback. Because traders are trapped, they'll use any little pullback they can get to sell. Bears who did not sell below 7, trapped out of a good trade, they're looking to sell a shallow pullback. And then you have bulls who maybe they bought bar 7 or bar 6, trapped into a losing position. They'll take any bounce they can get and get out of the way, wait for the bears to do their thing, get their second leg down before they start to buy. 9, pullback, 14, pause, 15, 16, that's 3 legs down, 1, pullback, 2, pause, 3, 16 being what looks like the biggest bear bar of the day. After 3 legs, you can expect at least a minor reversal. It's a parabolic wedge, which means it's minor. You have to go to a really small time frame to really clearly see that wedge. And 16 is a breakout of a bear channel line. You can expect it to fail, but you can expect the reversal to be minor. Parabolic wedges are minor. You expect a minor reversal. It's not like this is a wedge bottom at the bottom of a trading range and a big double bottom. This is a breakout on a higher time frame. Here's a 15-minute chart in the top right. And do you really want to buy? Does this look like a wedge on the 15-minute? No, of course not. But it is consecutive sell climaxes far below the moving average. So when you get a bar like 17, 17 is a bar that I think the bears will respect. If you were short for any reason, even if you sold the close of 16, you might just exit above 17. You expect that minor reversal, which might be 10 bars and 2 legs, sideways to up. So the bears might get out of the way, wait for that correction before they look to sell again. And in this case, the pullback was very deep. And 17, 18, 19, 3-bar micro channel, strong for the bulls, but 17 being an outside bar. What do we know about outside bars? Outside bars are 1-bar trading ranges. They're expanding triangles. You have a breakout below 16, a breakout above 16. And this is a 1 or 2-bar trading range down here. And trading ranges are areas of agreement, and they're magnets. So breakouts of trading ranges usually fail, and the market usually comes back and tests the apex of the triangle or the trading range. So down here is a magnet. Close of 16 is a magnet. There's probably support here, but there is a magnetic pull even if we rally. we're still below the big sell-off. This is still a minor reversal, even though it's big. And what do we notice about the rally? Pretty good rally. I mean, size of the bars aside, if we just imagine we don't see the price axis. It's a good rally. It pulled back maybe 70%. But what do we notice about where it stalled? Right when we get to the moving average, all of a sudden we find sellers. We try to break out above the moving average, but a weak close, we find sellers. And then another attempt, but could not close above the prior bars, and then a give up bar, 24. So we're stalling at the moving average, which leads me to believe, and even before that, to me, 17 through 19 is owned by the bears. Consecutive sell climaxes, so bears will stop selling down here. They're going to look to sell a pullback. I said there are trap traders because of the micro gap here, the 7 low, the 6 low. And you can see the market raced up near, it looks like we tested the 6 low on 19, found some resistance, but we know the rally strong enough for a second leg, so we have an implied pullback. You can call it a pause. Second leg up, 21, another implied pullback, and a technical pullback, and then a third push on 23. But we're testing that micro gap level, the bar 7 low. And notice the bulls never got a close above that price. So to me, the traders who got trapped up here, yes, this rally was pretty impressive. And aside from the fact that it was 120 points, which is pretty crazy to see that. But again, price aside, the size of the bars really has nothing to do with it. If the price axis was not here, you would have no idea that this was a 100 or 120 point rally. It would just be a big down, big up situation. And when we test that resistance, you'll see the bulls could not get a close above. They could not break above that resistance. And then we get 24, a give up bar. So 24, pretty good context for the bears. Big down, big up. But the bears, second leg down likely, probably retest the low of bar 17. That's the minimum target. Or I should say the minimum target is the close of 16 for the bears. But second legs often go at least one tick beyond the extreme of the first leg. So here, pull back, second leg. 24 resets the market cycle for me. Rally, pause, rally, pause. A third rally, breakout mode at resistance, big bear breakout, and a good bar, shaved bear bar, 24. You can expect a second leg down. We ended up getting a triangle. 27, 28. Bull breakout might be strong enough for a second leg, but really dangerous to be looking to buy. If anything, here, it's always in short, probably better to look to sell. And you can see even the bulls got their second leg here, but they could not even test the close of 28. And 31 through 33 is a wedge. 1, 2, 3. It's a truncated wedge where the third push did not get above the second push. And at this point in time, there were 2 bear breakouts that were still likely to get second legs. The big bear breakout down to 17 and 24, you could say 24 down to 26, was 29.30 the second leg for this bear breakout? Probably not. It's only about half the size of this breakout. And the bears, this breakout, will still probably get a more symmetrical second leg as well. But this was a very tight channel. You can call it a breakout. And the breakout phase is the strongest phase of the trend. And then after the pullback, we get the channel phase, which is a weaker part of the trend. So you can expect it to take more bars with more pullback and more uncertainty to get back down to these lows. But ultimately we got another leg 1 pullback, leg 2, and a third leg testing the lows. And you can see the reaction. Areas of interest for buyers, the 16 close, If you're a bear, you sell the close 16. Not ideal, but reasonable. You get trapped on 17. And maybe if you're using a wide stop, you scale in. But when the market retests the close of 16, you might just try to buy back your short there. You can see the reaction. But is here, bar 38, is this a major reversal or is it minor? Probably minor. We have a 4-bar micro channel in an overall bearish market. This is either a trading range or a bear channel. So bears will sell rallies. And then we can see the reaction at the new low. Pretty impressive rally. This does damage the bear case. At this point, it's probably not, or really technically not, a strong bear trend. But it still might be a bear channel. And in a channel for the bears, or let me reword that, in a bear channel, you get buyers at new lows, bears taking profits, bulls buying for at least a scalp. And again, last time the market was here, we rallied for over 100 points. So there's probably buyers here, bulls hoping for a wedge double bottom. But is 46 a good signal? Another 4-bar micro channel, fairly tight channel, overall bear channel. And 46, is that going to be the bar that reverses everything? Probably not. It led to a decent rally, but there's layers of resistance. Now we have the 33 low, another area of interest, probably resistance. What happened there? Not a great signal bar to sell. As far as signal bars themselves go, I think context was reasonable to take a stop order sell below 33, but the bar itself, not a great sell signal. So if you bought below 33, you're trapped on 34, and maybe you're trapped all the way down. So what's going to happen if we retest that price? Traders get trapped. You have bears who did not sell, trapped out of a winning position. Bulls who did buy, trapped into a losing position. Both bulls and bears looking to sell. The bears will probably get another leg down. Then what happened here? Rally, pullback, a third rally, another pause, an outside bar, a fourth leg up. And what happened here? 55, we tried to break out but could not close above, and then a strong bear breakout bar, 56. If you're long for any reason, 56 is the bar that's a signal to just get out. Bears, always in bears, can sell below 56 if they got out for any reason. At this point, it looks like a bear channel, and I suspect if we get to a new low, there will probably be buyers here. This rally wasn't all that strong, was not as strong as this one, but it might be enough to get more and more two-sided trading. Remember, channels evolve into trading ranges, so I do not expect a strong breakout of the bear channel line and an even stronger bear trend. I expect maybe we get 1, 2, and maybe a third big leg down to the channel line, and then at that point maybe a deeper pullback, maybe even a decent reversal for the bulls. But 56, really decent context, 3 or 4 legs up, testing a breakout point, resistance, and then a really good looking breakout bar. And then you can see the follow through. So when the context is really good like this, you can expect follow through like this. When the context is not so good, you can expect deeper pullbacks. But think about the pullback here. If you didn't sell the close or sell below 56, you never really had a pullback. You never had an opportunity to get short. And then these uniform size bars, really good follow through for the bears, probably more to the downside, but you can expect some support because of these support levels. And then 63, you could say 62 and 63, really attempting to break out of a channel line. But like I said, and this is an Al Brooks study, when you have a bear breakout attempt of a bear channel line You can expect the breakout to fail and reverse within 5 bars, and then for the market to go and test the trend line, which maybe there's a best fit trend line here. Just get rid of these other lines. So maybe this is the bear channel. Here's the trend line. Here's the channel line. Breaking below the channel line, but the higher probability event is a reversal within 5 bars, and then for the market to go and test the trend line. Even though it's a really decent looking bear breakout, this entire leg down is a micro channel, and there's very little overlap. It's good bear bars. The biggest problem is that it's a leg 3 and a channel line overshoot, so the context really not great for the bears. You can get a deeper pullback here. And then you get 64. So 64 is a bar like 56, but opposite. If you're short for any reason, you probably just want to get out above 64, wait to see what bulls do, maybe sell again after a pullback, but 64 will probably get at least some kind of second leg. And the risk for the bears is a pullback all the way back up to the trend line. Low 1, but we're at support. Bears get one decent close beyond the support, but then reversal back into the channel. They're trying to break out again, but you can see breakout attempt, fail, breakout attempt, fail, 66 as well. So another 3 or 4 attempts to break out of this support level, and then they give up, 69. So 69, probably strong enough for another leg up, even though it's 2 legs up against a bear channel. And you may get a deeper pullback. Who knows, maybe we'll test this breakout point. But I can't help but think about what Al talks about. Breakout of a channel line, you expect the reversal and the test of the trend line. You can see. So it's kind of like I said over here. Good context for the bears. You're going to get a more shallow pullback, if any at all. But here, 2 legs up against a tight channel in an overall bear trend, you run the risk of having a much deeper pullback. In this case, we came all the way back down to the bar 68 high, that stop order. Maybe sellers here, sellers above 68, trapped into a losing position. Bulls who doubted the breakout, they did not buy, trapped out of a winning position. 68 went for at least 1 times its risk. This is an I1R. Ali talks about that. And so it's a setup that you can place a buy stop or a buy limit order at the 68 high after you get 1 times the range of the signal bar. You get filled on 70, and then it goes for at least 1R. But now we have 2, 3 legs up. We're coming close to that trend line. 73, breakout attempt of the trend line, but late leg and counter trend, I suspect, probably sellers on the close of 73. Bulls taking profits, bears looking to get short. Bad follow through, no follow through for the breakout. Probably drift more sideways to down. And we went back down to the channel line in a hurry in this case. So I think that'll do it for this review. I had a little extra time today, so I wanted to do a little bit of a longer one there. And I also want to mention I do have a channel membership where I make videos where I go over the trades I take every day, or at least most days, where I'm trading a 3-bar micro channel system and improving it over time. But I do share the trades I take and how that's going. So if you want to join the membership, that is an option. You can find more information in the description of the video. And then if anybody's watching these videos and they have not purchased and studied the Brooks trading course, I really recommend that you do that, because if you want to learn how to trade, and especially if you want to learn how to trade price action, there's no other option. Al Brooks is the authority when it comes to price action. And I'll also recommend Ali Moin-Afshari. You can visit him at quantsystems.ca, and then you got the Brooks trading course link in my description. I mean, my videos are just, I'm a student of these guys, and if you find my content helpful, you'll really find their content even more helpful. So I'm just a messenger. I'm just, I'm studying and I'm learning just like everybody else, but the real source of the information is those guys. So you can check the description for their information as well. And that's about it. So thanks, everybody. And I hope everyone has a great weekend.